24 hours, it almost felt orchestrated. Three executives, three different banks, all saying exactly the same thing. What's driving it?
Yeah, exactly. This is something, as you said, this was disclosed at all these different investor conferences or on Bloomberg TV, as you saw with James Gorman. This is really just 2 months into the quarter. You typically see these big banks coming out around that time once the investor conferences kick off for that quarter. And they do typically reveal something about their trading desks. And on this occasion, they all said, hey, this is actually worse than probably what most investors were expecting. Of course, they didn't say it quite like that, but it is something that investors did not know. And that's really why you saw these stocks pull down yesterday, especially led by Goldman, which of course is, always more connected with the trading revenues than some of the other banks, which do have other revenue models.
Laura, when the bank chiefs snap into expectations mode, it's usually because they think there's too much optimism in the price of their individual stocks. Now, there's a whole lot of optimism in there, and there has been since the election, but we've faded that since March. So what's left in the price? Where is the optimism? Not just around trading. Is it around deregulation as well?
Yeah, there's a lot of things baked into those estimates at this point in time, the prices of those stocks. Of course, you still do have a little bit of the Trump trade going on, the optimism, as you've said, about the legislative agenda. There isn't really anything necessarily going on, but there's also not necessarily anything to say that these tax reforms, some of the things that the banks want won't happen. And then on the other side of regulation too, there are smaller things that some of the banks feel they still can get done more through these regulatory appointments. So, like leverage lending guidelines, for example, which plays into these big debt deals that the banks can do. Those kinds of things can still happen for banks. So that's sort of the regulatory side. In terms of revenue, there still is a lot of optimism around lending. There's all these questions about where that will go. But for the most part right now, there's still positivity on where the bank earnings will be drawn from there. And as rates, continue to be expected for rising up, that's always good for the banks.